Hello everyone, welcome to the Stock Trading Tutor channel. In this video, we'll be looking at the top 10 stocks that are likely to report over 100% year-on-year growth in the profit after tax in the first quarter of the financial year 2020. So this specific news item has been sourced from the money control websites. Along with this specific news item, we'll also be talking about the double-digit growth in the first quarter of with the net interest income in the cards for IndusInd Bank Bharat Financial merger may hit profit. So we will be giving the links to both of these sources in the description below if you're interested. Now let's go into the topic. So as we can see, the brokerage firms and analysts don't exactly have a very high opinion based on the previous performance of the companies. So as it can see, they have mentioned that it will be a repeat of the March quarter where the financials took the lead, while muted performance could be expected from autos, metals, agriculture, oil and gas, and the housing finance companies. So, according to Motilal Oswal, there has been no respite on the slowdown narrative, with several high frequency indicators and corporate commentaries pointing toward a weak backdrop as we enter into the first earnings season of the financial year 2020. So, with this introduction, let's go into the 10 stocks which are likely to have more than double their bottom line for the quarter ended June. So, according to Motilal Oswal, first suggestion is the ABB company, and the net profit is likely to rise by 102% year on year. So, Motilal Oswal expects the revenue growth if 11% on a year on year basis to 1,850 crore rupees over a strong growth in the discrete automation and motions. The EBITDA margin should also improve to 67% on a year on year basis. The net profit is likely to grow by 102% to 89.10 crore. The next expected company is JK Cement, with a net profit expected to rise by 148% year on year. This is mainly due to the estimates at 2.27 metric million tons of volume being produced, a fall of 2% on the year-on-year basis, but realizations are esteemed by increase of 8% on a quarter-on-quarter basis. So because of estimated EBITDA and better EBITDA margin realizations, the company is expected to have a 148% rise year on year. The next company we have is Biocon, with a net profit to rise by 183% year on year. So they Motilal Oswal expects the company to report a robust revenue growth of 43.6% and prim- primarily led by the 85% year-on-year growth in biologics expected approximately. So the research services business is expected to grow 30% year-on-year to 520 crore rupees. Next suggested company is Aditya Birla Fashion, and the net profit is expected to rise by 1,609% year on year. So, Motilal Oswal estimates the net profit to rise by 1,000% on a year on year basis because the revenue is expected to grow by 10%, while the EBITDA is likely to rise by 19%. But the retail companies under coverage of Motilal Oswal are expected to report average 11% to SSSG in first quarter on the back of lackluster retail spending during the election season and the end of sale beginning earlier than usual. So the pre-election uncertainties in April led to retailers witnessing a lack of consumer spending. But post-elections, retailers have seen pickup in sales. So Motilal Oswal expects Aditya Birla Fashion to perform extremely well. The last company Motilal Oswal is expecting to give good performance is Equitas Holdings, with an expected rise of 106%. So this is mainly because the asset under management is expected to grow 35% year on year as the securitized portfolio continues to run down. The net interest margin is expected to contract by around 15 base points to 8.7% on account of increase in cost of funds and moderation in yields. So the next brokerage firm which is giving companies is Kotak Institutional Equities. So they expect Axis Bank's profit after tax to likely rise by 141%, mainly because they expect the loan growth at 13% year on year with greater focus on retail, net interest margin to at 3.5%. So because the brokerage firm expects slippages around 2,500 crore rupees, mostly from investment grade book, it expects more traction on recovery as well as write-off pool. The next suggested company is Dalmia Bharat with net profit likely to rise by 309% year on year. So Kotak Institutional Equities expect volumes to remain flat to negative on year basis at around 4.5 million ton, realizations to increase by 9%. So in this, the brokerage firm estimates the EBITDA per ton to increase by 17%. So this is mainly the reason which offset higher other costs on account of low volumes. Next is India Cements. The net profit is likely to rise by 253% year on year. So although the Kotak Institutional Equities expects a decline of 1% on a year on year basis in volumes to 3 million ton, it estimates blended realizations to increase by 6%. So the brokerage expects the EBITDA per ton to increase by 36%. This is probably what is giving this analyst estimate of increase in 253%. So also the higher realizations and lower fuel costs aided by decline in pet coke prices that offer offset higher other costs due to lower volumes. The next company is Apollo Hospitals with an expected net profit rise by 170%. So this is because the brokerage firm expects the existing centers to grow at 12% year on year with new centers contributing incremental growth. It expects 20% growth in standalone pharmacy business. Then the EBITDA margin is likely to remain steady at 11.2%, and the AHLL will be offset by losses in Proton and seasonal weaknesses in the first quarter. So lastly, we have the HCG. The net profit is likely to rise by 104% year on year because the Kotak Institutional Equities expects the revenue to rise by 16% year on year, led by 10% year on year growth in mature centers along with ramp up of newly set up facilities. So the EBITDA is expected to rise 40 basis points quarter on quarter to 12.9% as losses from new centers decline modestly and expect gradual improvement in Milan performance after a weak financial year 2019. So these are the top 10 companies. To go through them again is ABB, JK Cement, Biocon, Aditya Birla Fashion, Equitas Holdings, and for Kotak Institutional Equities, it's Axis Bank, Dalmia Bharat, India Cements, and HCG. So these companies are expected to give a profit after tax higher than 100%. So these are the analyst estimates. So if these companies fall short of the analyst estimates, you can expect these stocks to fall at least a few days in the market stock price. Next, let's look at the next news item, which is double digit growth in Q1 net interest income on cards for IndusInd Bank and Bharat Financial merger. So the private sector lender IndusInd Bank is expected to report a double-digit growth in the net interest income as well as the pre-provisioning operating profit, but its bottom line could be subdued due to higher credit costs for the quarter ended June 2019. This stock was among the biggest losers among the Nifty 50 in the June quarter as it fell 20%, underperforming the Nifty 50 and Bank Nifty that gained 2%. So, as we can see, the bank will announce its first quarterly earnings on July 12th, so the numbers are not comparable on year and quarter on quarter basis. So analysts largely expect net interest income, loan book, and pre-provisioning operating profit to grow over 20% year on year. So according to Motilal Oswal, IndusInd Bank would be reporting the merged numbers. We expect IIB to report strong loan growth of around 33% year on year in the first quarter. Deposit growth is estimated to remain strong at 28%, margins to expand by 4.3%, driven by high yield booking with Bharat Financial. So, while expecting the net interest income growth of 53.3% year on year, pre-provisioning operating profit at 41%, ICICI Direct said that the advances of the merged entity are expected at 2.1 lakh crore as of the first quarter. So these are many analysts and brokerages expecting a very high and profitable return, profitable net interest income due to the merger. So that is the news for the day. We will be linking both of these sources in the description below if you would like to get more information on this topic. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel.